So I am currently in this Bitcoin trade, and I probably think that Bitcoin is going to close beneath 80,000, and I'm going to explain with this strategy. Now currently let me show you the trade I'm in. This is the trade currently, as you can see right here. So I'm looking for the market to print over here to go down to this point, right? So this is my trade currently. Now let me get into the analysis for people to understand what is happening or what is going on here. So basically there's the trade. Now I'm not going to lie, this trade has really been very difficult. Okay, and I'm going to explain why I'm saying it has been very difficult, especially on the 15 minutes time frame or the lower time frames. You know how I trade. Now let me just do an illustration on how I trade, right? So this is how I trade. So I make sure the market is in a trend. So let's say in this case the market is in a downtrend, right? This is how I trade. Now I wait for the market to break a level. So the market is in a downtrend, so this level actually broke this level. Usually what I've noticed is if the market breaks a low, this level, okay, the market retraces right into a supply region. Usually the market will retrace into a supply region, and once you get a reaction from that supply region, the market is going to come back down to break the previous low. So that is my trading strategy. Okay, I've used this trading strategy, and I'm going to tell you that there was a point in time out of 10 trades I won about 8. Okay, so it's a good winning trading strategy. And so if the market is in an uptrend like this, I've realized that what the market does is the market, after breaking this high, it retraces into a demand zone, okay, a demand region, and then once it gets a positive reaction, it goes back up to break the previous high. So I wait at the demand region. Once I get a reaction, a candlestick formation, then I take the trade and then it goes back up. And that's how I've been taking my trade. If you've been watching my videos, you realize that that's how I've been taking my trade. Now, because I used to trade on the lower time frames, I'll tell you I have taken L's with this market because I've been tracing the market for a very long time. This is the 1 hour time frame. I've been tracing the market for a very long time, and I was taking shorts and I was winning. Now when the market got here to this place, okay, and then it printed this low, right, I sort of marked out this area. At a point I marked out this area as the supply region, and I was expecting market to do what? To come back here. So guess what happened? When market retraced over here, it printed this long candle, and this is an evening star. This is on the 1 hour time frame. This is an evening star if you watch it very well. And with this long rejection, I knew that the market has rejected this way, and this is a supply region, so the market is coming back down. But guess what happened? The market broke through and then just went back up. So it has been some days of losing trades because it didn't work. Okay, and then I realized that no, the mistake was coming from me drawing the zone from the lower time frame, right? So I just switched and then went onto the 4 hour time frame, and I realized that okay, so the point where I took my trade on the 1 hour time frame, let me show you the point where I took my trade on the 1 hour time frame was actually not a valid region on the higher time frame. Okay, so this point is where I took my trade on the 1 hour time frame. Okay, this supply region is where I took my trade on the 1 hour time frame. Now if you go on the 4 hour time frame, that region is not a supply region. Okay, on the 4 hour time frame, that region actually is not a supply region. So I mean, you don't expect markets to react to that region. So on the 4-hour time frame, the supply region is here, this region, okay, this region, because I've told you the supply region is basically the last bullish candle that closed before market printed red candles or bearish candles. And if you can see from here, this was the last bullish candle that printed. Okay, I mean, you can sort of add this to it, but as you can see, this was the last bullish candle that printed before market decided to print bearish candles. Clearly you are seeing it here, right? This was the last the last bullish candle. So from the 4-hour time frame, this is actually the supply region, and this is where I was supposed to be expecting markets to react from. And so markets got there was a reaction. I went onto the 1-hour time frame. This time around I decided not to take a trade just from the candlestick formation. I wanted to wait for market structure, right? So on the 1-hour time frame, when market got to this region, when it got here, it printed this bearish engulfing candle, clearly telling us that market was going down. But this bearish engulfing candle did not break this structure. So on the 1-hour time frame, you realize that the market has been in an uptrend. Okay, the market has been in an uptrend so far, and then went up and created this low. Okay, so the market has been holding on to this low. Okay, right? And then this low was what I was waiting for the market to break. Once the market breaks this low, then I knew that market is now, coming back, is reversing. So indeed, when the market printed this candle right here, so this was the low. Okay, so the market sort of came here, got pushed up, came here, got pushed up, and then there was this red candle that broke this low. It broke it slightly. So once the market broke this low, I just marked this area. Okay, so once I marked this area, now what I was expecting, now I know that market wants to come down, but for markets to come down, what is actually going to happen is I was expecting markets to react to this supply region, the 1-hour supply region. So if markets really reacts to this 1-hour supply region, then I know that market is coming down, because if market is coming down, it will be reacting to supply regions. But if market is going up, it will disrespect supply regions and rather be reacting to demand regions. And a perfect example is here. As the market was going up, okay, so what happened? It reacted to the demand regions. Okay, so this region was a demand region. The market reacted to it, pushed up. This region was a demand region. The market reacted to it, pushed up, right? So it was reacting to the demand regions and was disrespecting the supply regions. So if the market wants to come down, okay, we are looking for a reaction with the supply region. And so indeed, so this area was sort of also a demand region, but the market disrespected it. So this should tell you the market wants to come down. So yes, once it broke beneath this level, it went up to react to this 1-hour supply region. And then I just knew, after I had the reaction with the supply region, I just knew that the market was coming down. So after I had that reaction, so there was more like a consolidation here. But even in a consolidation, you are seeing market structure, right? In a consolidation, you are going to see the market structure very well when you go to maybe the 5 minutes time frame, right? But even in a consolidation, as I'm saying, you are seeing some higher high, higher low, higher high, higher low, higher high, higher low. And then right here, the market couldn't print another higher high, and then printed beneath this higher low. And this should tell you that the market is now reversing. So indeed, after the market printed beneath this low, right? After I printed beneath this low, I just knew that market is coming down. And then the market, as I showed you, we've been in that trade. So I'm expecting I'll be targeting these lows, because listen, the truth of the matter is some people thought Bitcoin had changed character and was in an uptrend. The truth of the matter is Bitcoin is still bearish. Bitcoin is still bearish. I mean, this is the 4-hour time frame. If you look at the 4-hour time frame, Bitcoin has not changed character at all, right? So this was lower low, lower high, right? Lower low, another lower low, lower high. So for Bitcoin to change character, I'm expecting the market to print above 93,000 here. Yes, the market got to 93,000, but it didn't print above it, and now it is coming down. So for me, Bitcoin, it doesn't look like Bitcoin wants to turn bullish now, right? For me, it's not looking good, especially for the bulls. So Bitcoin is still in a downtrend from the 4-hour time frame. It's still in a downtrend until it prints above this level, until it goes to, let's say, 94,000. So once you see that Bitcoin has gotten to 94,000, then now we can say that Bitcoin is in an uptrend. Okay, so I saw a video where people were saying, oh, once it printed here, it came back here, so here is a change of character. For me, this one is really not a change of character, right? This is not a change of character, because I mean, this is more like retracement, and it was retracing in, I mean, higher high, low, high, but this is not a change of character for me. At this point is where I'm calling a change of character. Why? Because this was the recent level that broke this this low, right? This was the recent level that broke this low. This area has not really shown me anything. It has not broken any low for me to call this area a protected low. So you see, when market breaks a protected high in a downtrend, when market breaks a protected high, that is when you are going to say market has changed character. So this level is a protected high. This level, yes, indeed, it was a high, but it is not protected. Why? Because it did not break any level. It has not broken any level. But this high broke this low. So this high is a protected high. So until market breaks or prints above this level, Bitcoin is still in a downtrend. So I'll just be shorting the market at this point, right? I'll just be shorting the market. So that is that. So I have setups for the downtrend as well. So this is my setup for the downtrend. Even though I am still in the trade, I'll still be looking to take more positions, because why not? So the setup is this right here. I'm seeing that market is sort of getting rejected at this level, right? So this level could be a lower low, and then I'm also seeing a supply region over here, right? So what I'm expecting market to do, so market can decide to not even tap into the supply region, and that is if the trend, right, the downtrend is very high. Okay, that is if the downtrend is very strong. That's what I'm going to say. If the downtrend is very, very strong, then markets can decide to disrespect this level. It's not like market can decide to disrespect this level, right? If the downtrend is very strong, then markets can decide not to even tap into this level. It will just break this level and then go, right? But so far we are seeing that here the downtrend is very strong. Why? Because it didn't come back to even retrace into this area, because there is also a supply region here. This is also a supply region, and the market did not come back to tap into it. So it tells you that the downtrend is strong, right? So this is the level. So right now what I'm going to do is, as a trader, what I'm going to do right now, so this is the trade, right? I'm in profit. So what I'm going to do right now is I am going to set my stop loss at this level. So this is my new area where I'm going to set my stop loss. Why? Because market is in a downtrend, and this is a supply region. And so if market comes back up and prints above the supply region, it tells me that the bulls are in, and the bulls now want to turn the market into bullish. And so it means that markets will decide to come above all these regions. And so if I'm still in the trade, then I'll lose money, right? I'll lose a lot of money. But if I shift my stop loss to this area, it simply means that if markets prints above this region, I've still made some money. Okay, right? So basically, if market prints above this supply region, it tells me that markets will be targeting this supply region. And why is it that I've taken a trade and I've won at this level, and then I'll just wait for market to come back up to just wipe me out? I'm not going to do that. So this will be my new stop loss. So whether market comes back, clears everything, I'll still be in wins. I'll still have probably made some money, some good money. Okay, so this is my new areas I'll be looking out for. So if market taps into this region, this supply region, and then it prints, then I'll take the trade, set another stop loss here, and be looking for the lows, right? We are going, mind you, my target is here, 80,000. So I can decide to even take another trade here and set the stop loss here, or I can decide to, if market reacts here, I can decide to just take the trade here and set the stop loss here, and the take profit, not stop loss, take profit here, right? And set it, take profit here, or set a take profit here, and then we'll just be riding like that. Okay, we'll just be riding. Once it breaks a level, once it breaks a low, we'll wait for it to retrace into a supply region, and we'll just be riding the markets like that. So that's my trading strategy, and so far it is working. Share your thoughts in the comments box. Thank you.